Welcome to another weekly outlook video. So doing this weekly outlook video is part of my trading plan. I have to do this weekly outlook every week before a new trading week starts, simply because I majorly trade the weekly range candle. Trading the weekly range candle relies heavily on trying as much as possible to get the weekly directional bias correct. Of course, not every week it's perfect. That is trading. Nothing is perfect. So ICT calls this one shot, one kill. So what I do when you have, let's assume this is we're anticipating a bullish week. So anytime we have a bullish week, most of the time you find the candle opens, we form the low of the week. So this low of the week either can be formed between, most of the time it's between Monday to Wednesday, Monday, Tuesday, or Wednesday, depending with the kind of weekly profile we're likely to have that week. So we form the low of the week. Once the low of the week is formed, we now get an expansion. So this expansion of the weekly candle to go from the high of the week before closing the week is where majority of my trades come from. This is how I can easily make 1 is to 5 RR, even 1 is to 6 RR. For those people who've been following me, you've seen there's some weeks where I'm able to get such crazy RR. 1 is to 3 RR easily, 1 is to 4 RR easily, simply because I'm not trading a small range. I'm not only trading a daily range candle or a 4-hour range candle. I am looking to get this expansion of this weekly range. Of course, offers you more pips compared to trading a lower time frame candle range. So if you're interested in learning this kind of trading methodology, of course, I use ICT and SMC concept. Check the link in the description box. I'll also pin the link in the comment section. So classes start January 20th, 2026. Don't miss out, because there's a lot of value you're going to get from this. As we come towards the end of the year, I want to first of all appreciate all of you who have supported this channel. This is going to be our last weekly outlook video for this year. Until next year, mid-January, that's when you can proceed with the weekly outlook videos. So the reason as to why I introduced this weekly outlook is because I wanted you guys to really understand the process of what it takes to actually determine the bias for the week, using those and also doing the top line analysis from the higher time frame to the lower time frame. And I'm sure most of you have learned a lot. You have seen how just using the weekends to determine the directional bias for the week, it becomes so easy to trade during the week, because already you know what you're looking at and what you anticipate. So I was not using it as a signal. I also hope that this weekly outlook has motivated some of you to say that in trading, for you to be profitable, you don't need to be right every single time, because you've seen there are some weeks where we get it right to the T perfectly, and there's some weeks where we get the opposite. We really get wrong, where we're expecting a bullish week and the week ends up being bearish. Thank you once more for the support that you guys have given me. This channel will not have grown to this far if it was not for you. So far, we are at 2,000 subscribers. So let's get to weekly outlook. So as usual, you're going to start with DXY. Last week was actually a good week to trade. We had some very good opportunities that you could take advantage of. So DXY, this is what we had. This is the move that we had. Tuesday forming the high of the week, and then we got the bearish expansion on Wednesday and Thursday. Now trading the weekly range expansion means you would have traded the expansion on Wednesday and Thursday. So you see, you have to be very patient and wait for the market to print the high of the week or the low of the week, depending with your weekly bias, before finally now taking advantage of the expansion. So we do have this, at this point, we have this sell side liquidity down here, and you also have this sell side liquidity here. So what I'll do for this week, it's December, we only have a few weeks left before finally we close the year. I will just follow this bearish structure that we have here. So if this market is going to continue with the bearish move, we have 1 2 3, so we have this fair value gap right here. Remember, we said if you have a volume imbalance and a fair value gap together, you just mark it all as one PD array. And we also have this fair value gap up here. So we do have these two. So either the market is going to use this to push price lower, or we can get a deeper retracement to this fair value gap here before we continue with this bearish move. So this is the daily time frame. Actually, let's look at the weekly time frame. We always start with the weekly time frame. So on the weekly time frame, you can see we have this inversion fair value gap, which was tagged by price last week. This is what we used to push price lower. So price tagged it and it got respected. So of course, we're anticipating more bearish moves this coming week. So let's look at USDCHF. So USDCHF and DXY are positively correlated. So far, this is the only PDRA we have. We have this order block formed. Let's look at the daily time frame. So on the daily, as you can see, we have this daily fair value gap, 1, 2, 3. That's what we have. We also have this fair value gap here. So you can see it's still the same as DXY. We do have two fair value gaps, and these consecutive bullish candles, the moment you closed below it, this forms our daily order block. So either we have a retracement to this fair value gap and tag this order block, then we have that bearish move, or we have a deeper retracement to this other fair value gap, and even maybe in the process tag the order block. But majorly what I'm looking at is this daily fair value gap. Then we get that bearish move. Of course, you're going to see that with DXY because as I said, when it comes to trading major pairs or dollar pairs, DXY is our leading indicator. So we will just know. So let's look at EURUSD. EURUSD and DXY are negatively correlated. So this is what we had last week. And so far, the only kill PDRA that I see here is this order block right here. So let's look at the daily time frame. On the daily time frame, you can see it's still similar with the DXY and USDCHF, but now on the opposite direction. You can see we do have two fair value gaps. In this case, we have two bullish fair value gap. So we either use this first to push price higher, or we get a deeper retracement to this second one to push price higher. So if we measure with a fib from this low to this high here, you can see 50% of this range is around here. So GBPUSD and EURUSD are positively correlated and it's negatively correlated with DXY. So that you can do that analysis on your own. So let's look at yen basket. And if you look at the yen basket, of course, it's been bearish. And we've been looking at this previous year low as our draw of liquidity. And of course, GBPJPY price finally got to that high that we've been looking at. So let's look at the daily time frame. So if we look at the daily time frame, you can see we have this fair value gap here, and we also have this fair value gap here. So price has already tagged this first fair value gap and also this second fair value gap. So if you're going to continue with the bearish move, then price should use this because it has already been tagged to push price lower. However, if we violate it, then there's a possibility of us having maybe a bullish move or price just consolidating if price is not willing to go for this low here, because already you can see the GBPJPY price has already gotten to the target that you were looking at previous year high. So then maybe you're likely to get an SMT, and that is still a possibility. But this is what I'm watching for yen basket. Remember, we use the yen basket as our leading indicator for yen pairs. So let's look at GBPJPY. So GBPJPY will start with the weekly. This is the high that I was talking about. This is a previous year high, 2024 high. Price finally has gotten to this high here. And you can see we even closed above this high. So it was not a liquidity sweep per se. So this is all I see on the weekly time frame. Of course, we have this fair value gap and we have an order block here. That's the only PDRA we have here. So you can see on the daily time frame, we have this fair value gap here, which price has already tagged. And that's all I see. You have an order block here, and you also have this fair value gap here. If price, honestly speaking, price has already gotten to my draw of liquidity for the year. This is the high I was looking at. And of course, you only have a few weeks left before we close the year. So either we continue bullish, because yen is really bearish, and of course maybe yen basket is going for that low. Then if that happens, then of course you're expecting more bullish moves for GBPJPY. However, if we're not still, if you're not going to get bearish move for yen basket, then you'll see price will violate this fair value gap. Then we're likely to get bearish moves. But now the yen basket is our determining factor at this point on what exactly the GBP GPY is likely to do. Because already I don't have any other draw of liquidity, or we're just likely to even consolidate for the rest of the year and we close the year. So anything is likely these next 2 weeks as we come to the end of the year, guys. So let's look at gold next. And for gold, of course, this is what we have. This previous high is what you're looking at, previous week high. So far, we have this order block here. That's all I see on the weekly. Let's move to the daily time frame. So here on the daily time frame, we have this fair value gap here, and you have our weekly order block here. So either price gives us a retracement to this daily fair value gap and we continue with the bullish move, or we get a deeper retracement to tag this weekly order block before we continue with the bullish move. But as of now, gold looks bullish. You can see there was a time we had all these retracement, and finally price has been forming clear higher highs, higher lows, higher highs, higher lows. So this looks good for bullish moves. So let's look at NAS 100. And NAS 100, of course, it has been at all-time highs. Price has been bullish for majority part of the year. And so far, this is what we have. Last week, this is what price did. And this right here is an inversion fair value gap. So if price is still bullish, price is likely to use this to push price higher. Or there's a possibility that now this was just a retracement to tag this order block here, right here. Now we continue with the bearish move using this order block as a key level that will push price lower. So if you look at the daily time frame, of course we had all these move, and then last week this is what we had. So still, I just still see it that way. Either we are having a bullish, we're either likely to continue with this bullish momentum, or this was just a retracement to the weekly order block. Then we get bearish moves as we come to the end of the year, and in that case it means October Thursday 30th would have already locked the high of the year. So if the high of the year has already been locked, then most likely we are going to have that kind of price action where either we consolidate or we just have more bearish moves. However, if price has not yet locked the high of the year, then there's a possibility that we're likely to get more highs in the next 2 weeks as we come to the end of the year. So that is all I prepared for this weekly outlook video. If you enjoyed this video, don't forget to give it a thumbs up. If you have not subscribed, please subscribe to this channel.